Hi everyone, welcome to my YouTube channel Master Class with Tapas. Today I will be going to explain the Union Budget 2026 in a very simple and easy to understand manner. So please watch the video till the end and don't forget to like, share and subscribe to my channel Master Class with Tapas for new age management tips every time. Today I will be talking about the key highlights of the Union Budget 2026 presented by our Honorable Finance Minister Nirmala Sitharamanji. The budget was presented on a Sunday. A quick caveat, the data and the insights shared in this video are taken from various reputable newspaper and the commentaries by leading experts during the budget discussion on television. This budget is truly historic. It is the first budget ever presented on a Sunday, and it also marks the finance minister's ninth consecutive budget and an important milestone in India's fiscal journey. Let's understand the budget step by step so you can understand it better. Introduction. The three kartavyas, the national duties. The finance minister structured the 2026 budget around the three core national duties. First, accelerate and sustain economic growth through strengthen the India's resilience in a globally volatile environment, fulfill the aspiration of the citizen, empowering people to participate actively in national progress, and the third one, ensure inclusive development, making sure every region, sector, and community benefit fairly. These three pillars form the background or the backbone of Budget 2026. Let me talk about some macroeconomics outlook and fiscal deficit or discipline. The economic survey indicates a strong growth trajectory. The GDP growth for the financial year 26 predicted at 7.4, GDP growth for financial year 27 projected between 6.8 to 7.2. Fiscal condition remains a priority. Fiscal deficit target is 4.3 of the GDP by financial year 27. Indian foreign exchange reserve stood around $701 billion as of January 2026, demonstrating stability despite global pressure, including US tariff challenges, as we all know. Income tax highlight Union Budget 26 present a strong emphasis on tax simplification and the transition to the new framework from 1st April 2026. The new Income Tax Act 2025, effective from 1st April 2026, is one of the major factors of this announcement. The Income Tax Act 1961 will be replaced by the new Income Tax Act 2025. The new law aims to provide simplify compliance, reduce ambiguity and less litigation, ensure greater transparency, provide a cleaner tax structure with fewer exemption. That we all know. That's why we are moving to a new tax regime. Let me discuss the 10 things which, as a corporate people, we should be interested to know. There is no change in slab rates under the new regime. Deduction on EV, lease, purchase and education sales surcharge removed. New tax laws comes into effective from 1st April 2026. That I have already told you. New regime applicable to individual without rental business income. TCS on the overseas tour packages reduced from 20% to 5%. A one-time 6-month foreign asset disclosure scheme launched for small taxpayers, student, professional, returning Indians, etc. A disclosure scheme, there is a which having the three categories. Category 1, undisclosed foreign income asset up to rupees 1 crore must pay 30% of the fair market value, 30% penalty, immunity from prosecution. This is a good way to bring a lot of outside money to India. Category B, taxes paid earlier but foreign asset not disclosed, rupee 1 lakh fee, full immunity from penalty and prosecution. Smooth transition to the new tax regime. The government focus is to ensure seamless migration from the old regime to the new tax system, simplified documentation and filing processes, better clarity for middle class taxpayer while filing the returns. Note, standard deduction changes or a new slab announcement were not confirmed in the initial highlights. I can update you as soon as the official slab details are released, maybe in my uh, coming video. Let me talk more about the taxation which implicate or uh, look forward by the people like us. No change in income tax slabs. Multiple sources confirm no revision of tax slabs for 26-27 under the either regime, whether it is a old regime or a new regime. The government maintained the same structure, predictability, financial discipline, focus on structural reforms rather than rate cuts. Experts have noted that the major slab cuts were unlikely due to the fiscal constraint. You can see the volatility across all over the world. New Income Tax Act effective from 1st April 2026. This is the biggest reform of the budget 2026. Replaces the old Income Tax Act of 1961, which is long overdue. It simplifies the tax code with reorganized provision, clear language, and fair exemption, and very easy to understand also. I have read some of the provision myself too. Key improvement in the new law. New citizen-friendly written forms, clear schedules for exemption, HRA, LTA allowances instead of scattered section, reduce interpretational dispute, tech-enabled trust-based compliances with AI. TDS and TCS, the major relief announced. TCS on the overseas transaction reduce, which helped the pool packages reduce from 5%, 20% to the 2% flat, no threshold. This is a good thing that they have announced. Education and medical remittances reduced from 5% to 2%. This is another welcome step. These ease cash flow burden significantly. The TDS clarification, manpower supply is now clearly classified as work. Contractor TDS rate applies TDS rate to be 1% or 2% depending upon the nature of the contract. Then coming to the other provisions of the act, the automated lower nil TDS certificates, fully digital rule-based approval process is in progress. The PAN-based TDS for property bought from NRIs. No TAN needed for NRI property purchases. This I think gives a lot of benefit to the NRI who wants to buy property. One-time foreign asset disclosure scheme, a special 6-month disclosure window for small taxpayers. Students, young professionals, returning Indian small foreign asset holders can take benefit of that. That I mentioned, there is a lot of categories between category A and there is a category B and there is a category C, depending the nature of the penalties and the tax paid earlier not reported, that kind of a thing if it has happened. So all the details that you will see can be found out in detail in the government documentation. This is the part of the government trust-based framework, relief for accident victims, uh, motor accident claim tribunal, interest fully exempt from the income tax, no TDS deduction are on this. This is another great step. Return filing, big timeline relaxation, revised return windows extended. Earlier up to 31st December, now up to 31st March with a small fee. These are the small welcome steps that mentioned in the new Income Tax Act. No audit business cases and trust. New due dates is 31st August. So keep those dates in mind. Then obviously safe harbor and IT sector. New unified 15.5 2025 safe harbor margin for IT services threshold increased from 300 crores to 2000 crores. This is another good step. Securities Transaction Tax STT increased. F1 trading SST raised to 0.05%. These impact derivative traders. Then incentives and the miscellaneous tax provision, tax holiday for foreign cloud service provided. Cloud firms serving the global customer via India data center get tax holiday in 2047. This is the great step. NRIs and the market participation. NRIs allowed more equity investment via PIS. Individual limit 10%, overall limit is 24%. This is another step forward to bring a lot of money into India. Buyback, taxation, buyback now as tax as capital gain, not dividend distribution. Ease of living tax measure as per the government, income up to 12 lakh tax free under new regime due to 87A rebate. Simplified tax structure with fewer exemption, faster faceless assessment, lower dispute levels, and this is the key of the new income tax act. This is the other thing that didn't go change. The no slab changes, no new deduction, no rise in standard deduction, no HRA, LTA extra exemption yet expected later under the new act maybe. So these are the things that I want to discuss in detail about the new tax regime. Emphasis on the technology-driven compliance. The new tax framework will bring AI-based scrutiny, faster refunds, simplified e-filing, shorter dispute resolution time. This is part of India's long-term tax modernization plan, which was overdue. Inside details, new income tax effective 1st April 2026 have a lot of things that we need to learn and maybe catch up. I can share a separate video on the Taxation Act of 2025. Now talk about public central expenditure. Capital expenditure increased to 12.2 lakh crores from 11.2 lakh crore. This will support job creation, infrastructure and long-term economic growth. Then big infrastructure push, high-speed rail corridors, 7 routes has been announced. Mumbai, Pune, Pune, Hyderabad, Hyderabad to Bangalore, Hyderabad to Chennai, Chennai to Bangalore, Delhi to Varanasi, Varanasi to Siliguri. And then obviously there is a national waterways, 20 new waterways be open or shortlisted. And there are city economic region CER, new concept introduced. Each CER will receive 500 crore development under the challenge mode funding. Manufacturing and Make in India 2.0. There are some key initiatives also. 7 strategic frontier sector targeted 2.0 for the semiconductor, electronics component and scheme raised to 40,000 crores. Another important, container manufacturing get a boost. MSME 10,000 crores, fund for growth extra 2,000 crores for self-reliant fund, push for MSMEs to go to local to global. Then coming to healthcare and Ayush, 10,000 crore for Biopharma Shakti Mission. These 3 new All India Institute of Ayurveda announced. Social welfare and rural development, launch of Mahatma Gandhi Gram Swaraj initiative, promotion of khadi, handloom, custom and the rural livelihood. Over 25 crores Indians moved out of multidimensional poverty. This is a good thing to understand and know. Then obviously technology, AI, digital economy, strong push for AI driven governance, public services and startup innovation. Then coming to renewable energy and climate initiative, 20,000 crore for carbon capture, utilization and storage for over 5 years. Then coming to logistics, sports and trade, India to be developed as a global sports goods hub. great thing to know. Uh, so the all the major goods manufacturing or the manufacturer will come to India and produce sports goods for the global player. Final summary: the Union Budget 2026 is built around economic growth, inclusive development, long-term structural reforms. And obviously, to sum it up, the key highlight massive infrastructure expansion, strong push to semiconductor, electronics, biopharma, and MSME, introduction of a new income tax act of financial 2027, technology led governance, simplified tax compliance. This budget aims to build a resilient, technology driven, globally competitive India. So, friends, if you found this video useful, please like, share, and subscribe to my channel Master Class with Tapas. This is Tapas signing off. See you in the next video. Bye for now. Thank you.